Shares of Delta Airlines are much higher today after topping fourth quarter expectations. Add to that, the carrier says it is set up for the best financial year in its history, and so are other airlines, as you see the stock up there by 10%. Let's get more now from Stephen Trent, Managing Director of America's Airlines and Latin Transports at Citi. Hi, Stephen. Thanks for being with us.
Oh, thanks for having me on, and Happy New Year to you.
Happy New Year. So you believe that what you're hearing out of Delta today is very encouraging. Break that down for us.
Yeah, absolutely. So we've thought for some time that the network airlines are much better positioned than the discount carriers. The amount of revenue coming from outside main cabin, so the premium cabin, the segmentation of the cabin itself, which allows for the carriers to optimize ticket revenue. And it also gives them the ability to upsell to their airline customers. But even if you look beyond those verticals, you have the ancillary side of the fence, loyalty, and especially co-branded card. Those fields look pretty potent for the U.S. network airlines. So we're bulls of the big three.
Right. We talked a while ago before the new year about these co-branded credit card relationships that the airlines have. Can you tell us more about that? How big a part of the business is it?
Yeah, absolutely. So only a piece of that pie is actually coming through in the income statement as revenues related to royalties. And that maybe is something even by itself that is, let's say, a high single percentage proportion of total revenue, but a very high margin proportion of that revenue stream. And more importantly, there's a lot of that cash flow that bypasses the income statement and looks and smells more like an air traffic liability. So anytime a co-branded card user uses that card to purchase a goods or services, the financial partner is obliged to buy miles from the airline. And that, in our view, is a very lucrative opportunity for the airlines and probably for the financial institutions as well.
Now, Stephen, do you foresee regulatory relief from the incoming Trump administration for the airline sector?
Yes, I do. So I can't say with certainty whether we're going to see a lot of new legislation put in place. But certainly, I would say from looking at the tea leaves at this juncture, that the Department of Transportation and the airlines look like they're set up to have a smoother relationship moving forward than they have recently. So time will, of course, tell, but we would certainly not be expecting sort of additional heavy regulation to get put into place with the transfer of power coming up here later this month.
Now, the CEO of Delta said this may be the best year financially for airlines in general, for Delta as well. So do you agree with that? And second part of that question is, how is it that these airlines that used to be so reviled by so many investors, such as Warren Buffett, and they've been burned so many times, how is it that they've turned things around and they're at all-time highs and they're doing so well?
Yeah, look, absolutely. So I think earnings growth is just a piece of the pie. I think earnings quality is another really important piece of the pie. And when we think about those two together, then on top of that, we consider the paucity of new equipment per capita because of these supply chain delays. And certainly if you're in the latter environment, if you're a network airline, you win the battle by having strong unit revenue. If you're a discount carrier, you're never going to win the battle on strong unit revenue. You're going to win on having the lowest seat mile cost. So in an environment where everybody's seat mile costs have gone up, there's one category of airlines that looks very well positioned to build unit revenue. Delta, United, American, Alaska, they fall into that category. And then when we think about the evolution of the quality of earnings streams improving. If you go back to the credit crunch, Delta, by my recollection, had maybe just over $1 billion of co-branded card revenue. Now they're approaching $8 billion. So that does create a material difference when we think about earnings quality and lower underlying earnings volatility.
So, Stephen, Delta, as you know, was the first of the airlines to come out with earnings for this quarter, for this earnings season. So you've got United coming, American, and others. Which one should we watch out for as perhaps being the strongest of the bunch?
Yeah, great question. So we're constructive, as I mentioned, the four I mentioned, Delta, United, American, and Alaska. Certainly in terms of where we're going to see the greatest strength, might be too close to call. I would say of that quartet of carriers I mentioned, probably American Airlines could be an outlier because relative to the other three, it's not a consensus buy. So I think in terms of the extent to which that one could surprise the street, not only in 4Q earnings, but whatever guidance they give, I think there's a potentially intriguing setup into that print.
All right. Thanks for the context today in the airlines, Stephen. Have a great weekend.
You too. Thank you.